In this presentation, we're going to look at an accrued incurred expense. And we're going to use the accounts payable account here for accruing that expense. So the accounts payable account is a liability on the balance sheet. And then accruing that expense, we're going to accrue it to the expense account here, which is part of net income on the income statement. So what is accrued or incurred expense? Well, for example here, we've used some goods or service, for example, a property tax, which was for year 20x1, and it will be paid in the following year, the next year, 20x2. Some other examples might be utilities, rents, interest and borrowed funds, and so on. So just looking here at this time frame, I looked at a March through October time frame where goods or services were used, and I looked at them here at $600 per month. Now, these goods or services were accrued or incurred expense. The expenses were incurred, but they're not yet paid in cash. So we use the service up here, and after we use this service, we paid for it. We paid for it afterwards. In this case, it was towards the end of the year, and I used $5,000 payment as an example for the services that we used earlier in the year. So let's just go look here at how we accrue or incurred these accrue these expenses here in the accounts payable account. Say if, for example, we were using the goods or service here at $600 per month. So what we would do here is credit or increase accounts payable by that $600 per month, and then the corresponding entry would be here to expense at $600 per month, where we debit expense or increase expense at $600 per month. And then at a later date, after we've used these services or goods or service, whatever, then we actually pay for them. In this example, I used a $5,000 payment here, which to accounts payable, so we debit or decrease accounts payable. We're paying for it here. And then the corresponding entry would be to cash, where we credit cash or decrease cash by that $5,000 payment. Now remember, cash is an asset on the balance sheet here. So looking in summary or recapping what we've done here, we've used the accounts payable account to accumulate or accrue an expense that we've incurred, and then we expense it to the expense account here, which is part of net income. And remember that this expense account gets close to retained earnings at the end of the year, which is part of stockholders' equity on the balance sheet here. And at a later date, after we've used those goods or service, we paid for them here. So we reduced accounts payable, and then we decreased the cash account by the corresponding amount. Now, so this is just an overview of what an accrued or incurred expense is and how we account for it between the accounts payable account and the expense account here in net income.